Hello and welcome to another episode of Financial Deep Dive with CWT. My name is Caleb Tanner. I'm CWT Holdings and FinanceByCWT.com, a financial media company looking at stocks. And for today's episode, I want to be not really like stocks for one, but also I want to be looking at the ARK Innovations ETF, which is a fund, an exchange traded fund that holds a bunch of different stocks, led by Cathie Wood. And one thing I want to focus on is, well, first off, I think Cathie Wood, I think ARK is kind of in some trouble. Like, let's look at some numbers real quick. Year to date, they are down 51.1%, which is insane. In a 1 year, in the last 12 months, so if 12 months ago you put $1,000 into the ARK fund, you would be down 61.69%. And if 3 years ago you put $1,000 into the ARK fund, you would still be down 0.66%, which is absolutely insane when you look at where this fund was just a year or two ago. Like during COVID, this fund was absolutely killing it. And they have since lost all of that in such a short time. We're now even 3 years back, you still haven't made a single dollar investing in this fund if you've held it the entire time. And I think that is not good. Like, let's say someone's putting money into a fund. Like, they find an investment fund, they're going to put some money in it. The reason that people do this, like most of the time when people put their money into a fund, it's because they want a return off their money and they don't think they can do it themselves. So, or they think they want to beat the market basically. Because everyone, like if you just wanted to perform the way the market does, you just put it into a total market fund. If you put into a fund like this, you're wanting to beat the market. And you're not in ARK Innovations ETF. And let's look at some of their holdings real quick. So the company they have the most money in is Tesla. And Tesla's kind of their like saving grace right now. Like this is the only, it's the stock that is, it's down it's down year to date, I'm sure. But overall, like the stock has done pretty well actually. Like it's still up, quite a bit, like over the past few years. Their second biggest holding is Roku. And today, actually, which probably a few days by the time this actual episode comes out, they're down almost 30% after a really bad earnings call. Which, the fact that is their second biggest holding is insane to me because Roku's a very risky play. Obviously, that's easy to say now looking back because it's performed so terribly, like today. But that's not really that much of a surprise. Like the fact that even right now they still trade at a price to earnings ratio of 94, which is insanely big. Which, Tesla, for instance, also trades at an insanely high PE ratio of 95. Like the fact that our two biggest holdings trade insanely high past their earnings to me is troubling. Like if I had money in ARK, I would be scared that basically the two biggest holdings are ones that are trading way beyond their actual fundamentals, where it doesn't really make sense. Her third biggest holding is Teledoc Health, which this stock I don't have too many bad things to say about it. Like, it hasn't performed, very well. Like in the past year, it's down 76.55% in the last 12 months, which is obviously not ideal for some holding it. Like it's not profitable. They don't make a profit. But, they are mostly increasing their revenues. Their last few earnings calls have not been good at all. Like if this is a good long-term play, it could be. I personally would not invest into this company. But I understand why she might. I don't think this is as bad of a stock as the other two. But, yeah, I still wouldn't invest in this one either. And then next, she has Square. I actually really like Square as a company. I do not like it as an investment right now. just because I think they are insanely overvalued. Even now, which in the past year, last 12 months, the stock is down 71%. Again, I like this company, and I want the company to succeed, but it is down 71% over the last 12 months. And then lastly, in our top five, like our top five investments, you have Zoom. Why she is still holding Zoom is something that I don't understand at all, which is again down 71% over the last 12 months. Like, you've probably noticed a pattern here. Of her top five holdings, four of them are down 70 plus percent. Roku, for instance, is down 81.81%. Like, that is absolutely insane. Tesla, who is the only company that would be up over the last year, of her top five holdings, Tesla is the only company she has that is still up over a 12-month period, and it's up 30.25%, which is just awful. The fact that only one stock that she picked out has actually increased in value over a year, to me, is very troubling, especially because I don't think a lot of these stocks are going to do that well over the next few years. Like Zoom, I don't understand why anyone would be holding Zoom right now. It was a good stock to hold during COVID when everyone was using Zoom, and when she first bought it, I thought that was a genius play. And I still do for when she bought it. But the fact that she's held on to it, to me, just makes no sense at all. And the fact that she's still bullish on the stock, to me, is very troubling. Tesla, I think Tesla is very overvalued for the most part. I think it could be a very strong, long-term hold. I wonder how it'll perform over the next few years. And on all of it together, if I had any money in ARK, I'd be kind of worried. I don't understand. A lot of these are risky plays that, if I managed a fund, most of the money that I would, if when people give me money, I'd put most of it into very safe plays. And I'd put a few of the money into some risky stocks, because if one of them performs well, overall, that's good for the fund. But my top five holdings would not be insanely, what I deem, overvalued companies trading at, if they're profitable, insanely high PE ratios. It just wouldn't happen. It's not what I would want to do. So the fact that she does, I think, is very troubling. One thing that I've been considering is there's an ETF called SARK, where you can basically short ARK Innovations. And I've been strongly considering doing that, looking at, the top five companies that she's investing in. I'm not really bullish on any of them, and I think it could be a very good play. I don't know if I'll end up doing it or not, but I think it'll be a very good play. But yeah, that's her top five holdings, and I'd be nervous if I had any money in ARK right now. Thank you for listening to this episode of Financial Deep Dive with CWT. Go to financebycwt.com, join our email list, and keep in track with all the articles that we post, or follow us on Instagram at FinanceByCWT. Thank you.